Hello, everybody. It's a pleasure to be with you today. Can we have the first slide, please? Thank you. Before we talk about this messy graph and other data and information about Tropical Smoothie and the sector, I want to give you just a bit of context. FRANdata is a research company. That's all we do is focus on the franchise business model, and we've done so for more than 3 decades. We have more information about franchise brands than anyone in the world, and we do a lot of comparative analysis. We do a lot of advisory work with franchise brands. That's who we are, and that's what we do. And in that context, over the last 10 years, our observation, particularly in the quick service restaurant space, has been one of market share battle. A change of a couple percentage points in same-store sales from one year to the next, or an incremental increase in some type of service was what one expected, and that was a big deal. Well, in this environment that we're in right now, our motto really has changed to don't let a nasty crisis like this go to waste. It's a rich opportunity to grab market share, to innovate, and for franchisees to make more money. And yes, the pandemic is very painful, and it's been tough on a personal as well as business level. But the message here today that I want to talk through and show through some visuals is one of opportunity. And to do that, we need to go back and look at what happened during the crisis and what franchise sectors did well, but not to highlight the outcomes, but to understand why and what was driving this and what was the not the obvious change, but what was underneath it. Let's start with this graph. Most of the changes that led to the top line performer, pizza, and the second and third lines that were leading the recovery side after the initial shutdown of businesses, which include quick service, traditional quick service, and breakfast QSR. Most of the things that we're doing, they were already doing. There's very little that was new, but what was changing is the consumer perspective on it. You know, curbside pickup, home delivery, contactless transactions, personalized menu boards, and so forth. They've all been around for some time. You know, we advised a company, it had to be 10 years ago, on their technology of scanning license plates as on drive-throughs and adjusting the menu board based on previous purchases. That was 10 years ago, but it wasn't accepted by consumers, and it wasn't introduced to any degree into the QSR market until a dramatic change came about. And that dramatic change, of course, was the pandemic. This crisis has compressed a lot of the evolution that we were seeing anyway. Curbside pickup, home delivery, all of those things were in the process of changing. Even ghost kitchens and some of the more recent in vogue discussion topics, they're not new, but they have been compressed into a very tight time frame of demand. In other words, instead of this evolution that was happening over a 5, 6, 7 year period, it's been compressed into about 18 to 24 months. You could characterize that more as a revolution. And it has long-term consequences because what's changed is consumer behavior. It's not the technology, it's not the capabilities, it's consumer behavior. As I said, the top 3 lines, why were they able to lead the recovery versus all of these other sectors within the food service? Well, because in the case of pizza, they already had curbside pickup. They already had home delivery. Was that lucky? Well, of course it was. It wasn't that they were anticipating a huge wave of change with consumer behavior. It just happened. But the consequence is they were positioned to be able to handle it, both from the franchise system standpoint and from the franchisor's support of that change. Next slide, please. How the QSR industry is adapting. If we go further inside what was actually happening, what was changing. For customers, clearly, they were demanding curbside pickup, home delivery, contactless transactions. Again, contactless transactions have been around. The technology's been there, but it just hasn't been adapted to any great degree, and now it's being forced. Consumer behavior itself is changing. What do the franchisors do and franchisees do during the crisis that were leading this? FRANdata conducted a number of surveys starting in March of last year with franchisors, asking, what are you doing? How are you adapting to it? What are you changing? How are you responding to this crisis? And how is your system responding to it? And it was very interesting to see this evolving over the course of a number of months. Some brands moved very quickly. Others were more of a deer in the headlights kind of look of, we're not quite sure what to do or how to do it, or if we can get our franchisees to do it. And if we know what to do, we still aren't sure it's the right thing to do. So there was a lot of hesitancy with many brands. And not coincidentally, a lot of the brands that were stronger going into the crisis, in other words, they had momentum, they had strength, as we'll see in a moment, was true of Tropical Smoothie, that they were able to move more quickly with better leadership, not only because they were performing better going in, which is a reflection in large part of how the entire system has been managed, but they were also in a better position not to have to deal with problems that were already in existence prior to the crisis. So you look down through this list, how many of these things that you can relate to and say, well, yeah, we did that. Well, we did that back in April. We did that back in March. Or Tropical Smoothie franchisor management put into place some of these things early on. And the answer is, you did most of these things on the early side. And that is the most important component of this. It's not just did you. Many brands did. Not all, because some of them were dealing with problems. But the ones that did, the question is when. Because if they got on top of it early, if they had better leadership across the system, franchisor, advisory council, franchisees, if they were able to move more quickly, typically the outcome is today they're in a better position to prepare for the post-pandemic period. And that, as you'll see in a moment, was true of Tropical Smoothie. Next slide, please. What we can expect for the rest of 2021. We're getting sort of in the period where we're beginning to see the end, but we're not there yet, and we still have our heads down, and we're still trying to figure out what it takes to get through this. Well, what's important for us to step back and consider is, in the first case, the first bullet point, how has consumer behavior changed? And how sticky, and if I were to put that first bullet point into one word, it would be stickiness. How sticky are the changes that we've had to, forced to adapt to in the interim period? And that's not a simple question to answer. And it's one that we're still trying to understand and we're still trying to test. Is curbside pickup a matter of the future? Are ghost kitchens important to put in certain places? Are contactless transactional activity now expected? Well, the answer is, to some degree, yes, to all of those. The real question is to how much of it is important, because it takes capital to invest in it. It takes change of behavior, not only in response to what the consumer's doing, but with employees, with operations. The key to that, of course, is coordination. If you're communicating back and forth well within a system, and this isn't speaking to Tropical Smoothie, this is our experience in it as we advise many brands, understanding what happened, why it happened, and how much of it is going to continue to be a part of the recovery process is what is going to be key to understanding where things are going. The most important point in this slide, though, is the second one. We'll speak to some of the competitive positioning that Tropical Smoothie has in a moment. But for the moment, accept the fact that you were in a stronger position relative to many brands, to most brands, in the QSR space. Stronger going in, adjusted earlier to the needs of the pandemic, and therefore coming out of the pandemic, coming out of and into the recovery cycle, when you're at the starting gate of saying now we're past and we're now starting to move forward, consumers are starting to move and to behave in whatever that new world looks like, you will have, in our opinion, about an 18 to 24-month head start over those brands that are still having to look internally to say we have problems that pre-exist the pandemic that we still have to fix. And we had greater problems through the pandemic because we didn't move quickly enough. And therefore, coming out of it, we are going to have to focus internally first. And that's that 18 to 24-month head start that you have. And so our advice in that is don't squander that lead. It gives you an advantage. But what's going to happen is that consumers, because some brands aren't going to be as aggressive and adjust and be able to do the things that you're in a position to be able to do, consumers are going to be up for grabs in many of your territories. Territories themselves are going to be up for grabs from a competitive standpoint. Be aware of that dynamic, because coming out of this pandemic, there's going to be a lot of shifting and a lot of movement on a competitive brand basis, and you want to be in front of that. Yeah, there's ghost kitchens, there's digital kitchens that are showing up. It's a copycat world that we live in. Chipotle just announced a digital-only model, or recently did, the Chipotle digital kitchen, and they're going to put that in urban locations because they can fit it in a more tight positioning. There's a lot of downsizing going on. Starbucks shedding 800 locations. Dunkin', more or less the same number. Burger King also expects to be trimming a lot of their U.S. locations. That's a lot of shifting, a lot of movement, a lot of dynamic, not only on the competitor side, but on the consumer side, their behavior, their movement to the office space if they return to the office. Maybe they only return 4 days a week. Well, that's a change of pattern of behavior, and it's shifting their buying patterns. It's shifting the post-pandemic period, and that's what that coordination with the franchisor and franchisee is all about. You've got the business model of franchising is positioned to do that well. Now it's a question of, can you take advantage of that and keep that lead that you should have coming out of the pandemic? Next slide, please. All right, I alluded several times to your competitive positioning. Let's take a look at it. Next slide, please. FRANdata does a lot of benchmarking, a lot of comparative analysis for brands, for sectors. We are a rating agency for lending that you'll hear from Paul Santomauro about in a few minutes. There are several metrics that we look at in franchising as to how a particular brand is doing. And if we were to single out sort of one at the front end, how are they doing with regard to consumers? Well, the same-store sales, the average revenue changes, those are obvious measures. If we then look at, well, is the brand growing? Is it adding units? Is it not only filling in areas that they're not in, but filling in territories that they are in? So the unit growth side of it is a measure. You can have one perform well, but not the other. You can add a lot of units, but if you're not very profitable, sooner or later it's going to catch up, and you're going to be focused internally, such as many brands were that I alluded to earlier that were weaker going into the pandemic. And finally, you can do both of those things. You can have better revenue, you can have more unit growth, but if the costs associated with getting a unit up and running are higher, you're still kind of pushing against a wind resistance that makes it harder for a particular brand to perform. So we look at these three things. Let's look at these three things only and see how you do. Let's look at the first one. Next slide, please. Thank you. Unit growth trends. The top line, sandwiches and sub-comparable brands, As I said, this is data from FRANdata. This is information that we have across all brands so that we can aggregate brands from an individual competitive standpoint, brand to brand, or across sectors. If we look at where Tropical Smoothie is, it's that line that actually is rising the fastest from an incremental change standpoint, which is the second line showing there. So the performance, you're improving at an improving rate going into the pandemic, which is one of the key things that I said, are you strong going into this crisis? Because if you are, you have a better foundation and a better launch point coming out of the crisis. So that's clearly the case. Next slide, please. Average system growth. This graph doesn't quite highlight it in a way that is visually clear. So let me just mention that Tropical Smoothies increase has an annualized 15% increase across the last 3 years prior to the pandemic. That's faster than comparable brands. So you're growing faster from a unit expansion standpoint, and the unit revenues are increasing at an increasing rate, and those are two very strong indicators of positioning. Of course, if both of those require a disproportionately high amount of investment, that would be a problem. Next slide, please. That's, of course, not the case as we look here. And if you look at the bar chart on the right side, initial investment per square foot ratio, the initial investment per square foot, how many dollars per square foot of space are you investing? In other words, how much are you putting on top of that footprint? The answer is you compare the best of the comparisons that we would typically associate with brands in the same competitive space as Tropical Smoothie. Impressive on all three levels, 3 metrics, 3 results that are all strong. Therefore, my point earlier is that 18 to 24 month lead you should be feeling good about. However long it takes us to get to the starting gate of the recovery, when you get there, you should be positioned well to take advantage of it. Next slide, please. Finally, just an observation on change in a different way. What I've talked about so far has been driven by consumer behavior, changes in consumer behavior. We know that the things that consumers were aware of before the crisis were all of the things that we're doing now, that whether it's contactless transactions, ghost kitchens, all of those things were around, and we didn't invent them in the last 12 months. But consumer behavior was driven to accept them. They were forced to. And in much the same way, the business model of franchising itself is going to change. And I only mention this to you as franchisees because you should be aware, and I say this not as it relates to Tropical Smoothie corporate, but as it relates to every franchise system, is that you should be aware of what the changes are that are being imposed upon franchisors as a consequence of the pandemic. And it has to do with many of the functional areas that are involved in with development. Do prospects today, a first-time prospect, want to get on a plane and fly for Discovery Day into a site, or do they want to see it handled in a way that we've forced everybody to do it, which is calls like this, and video conferencing, training. Learning management systems require a significant investment on the part of franchisors, and a lot of franchisors haven't made that investment. A lot of them, and certainly the ones that are struggling financially, can't afford to make it. It can be tens of thousands, even hundreds of thousands of dollars. But learning management systems from a training standpoint is very much the direction that younger people are going in. They're used to being able to interact electronically as part of the guidance of their training in just about any kind of field. Consequently, it's being forced to change the way training is done, the way guidance on training, the support and the technology around it. We could go on. Brand marketing, Same thing. The changes that are coming from brand marketing. There are a lot of different things that are showing up differently. Operations, the personal interaction side of it, compliance. All of these things are being presented in different ways and being considered and forced on change. And I mention all this to you as franchisees because you should anticipate that there is going to be a changed interaction on many of these functional areas that a franchisor is responsible for. And you should embrace it. How can we even do it better? How can we get around the kind of the traditional thinking on the way we interact, and how can we make that better? Because you're already being forced to do that with consumers. You also should consider it with regard to the franchisor, because it's not just about cost savings, it's about being more effective and ultimately being more profitable.
I'm Paul Santomauro, and I want to wrap this up here by talking about the current lending environment, hopefully get you guys excited about that. I'm Director of Lending and Risk Products at FRANdata, and I work closely with banks as they try to navigate the franchise space and decide what brands they want to lend to, but also what types of borrowers and franchisees and multi-unit operators that they want to get involved with. So I'm going to go over a couple points about what makes Tropical Smoothie stand out and some of the great opportunities that I'm seeing that are available for you folks as franchise owners. Slide. So lenders have a challenge when underwriting a franchise loan, and the challenge is this: they have to underwrite you as a borrower, but they also have to underwrite the performance of the brand. And that's where FRANdata comes in. We help lenders do that with a score and a report that we call a fund score, and it can very simply be thought of as a FICO score for a franchise brand. Banks are underwriting you as a borrower. They're going to rely on FRANdata and the fund report to underwrite the concept and underwrite Tropical Smoothie. They use it to compare one brand to another, but as I said before, they also use it to compare industries and different verticals in franchising, whether that's the QSR space, which you guys are in. But of course, as you know, there are tons of different concepts and brand verticals in franchising, whether from early childhood development to senior care, really all over the board. But really what I wanted to talk to you about today is why this impacts you and why it's important to know that a fund score exists and why Tropical Smoothie stands out. The SBA and conventional lenders that are out there are going to have a much better time, much easier time getting comfortable with a brand and a concept that has a top tier fund score. And in many cases, they're going to be able to offer better rates and terms to franchisees of those concepts. And this really comes into an impact for you folks that maybe have 1 unit, 2 units, and are looking to expand your holdings and expand your kind of purview as a multi-unit operator. Banks are more willing to continue to lend to brands that have and maintain a high fund score over time. And this is again one of the areas that we'll look at that Tropical Smoothie really stood out. So this, for you as a franchisee, this means having greater access to capital when you're looking to open units number 2, 3, and 4 throughout your development as a franchisee and an operator of Tropical Smoothie. Next slide. So now that we've established the fact that lenders use this fund score, let's take a look at how Tropical Smoothie looks from a lender perspective. What do they see when they look at the fund score for Tropical Smoothie? What does it mean to them? How are you guys standing out against other brands? The report itself, I'm not going to go too much into the particulars of it. The score of Tropical Smoothie is a 905. It's one of the highest scores, I think one of, if not the highest fund score that we have in our inventory. Brands are scored on both qualitative and quantitative information, as well as information on the franchisor level performance and franchisee unit performance. So again, it's a report that's aimed at the lender to help them understand the performance of the brand and also the performance of the units and franchisees on the ground. We've tested the score against SBA loan loss data, as well as portfolios of some of the top lenders in SBA that are subscribers to FRANdata and our information service. We found that the fund score has been highly correlated to loan performance. That's one of the reasons why lenders rely on it so heavily. As I said, we break the franchise industry down by fund score into different performance tiers, and Tropical Smoothie with a 905 score is in the highest performance tier that we have. So from a lender perspective, Tropical Smoothie has been and will continue to be a top tier franchise from a credit risk perspective. And that's really important going into this year in 2021 in the current environment that we find ourselves. Next slide. So from an industry and a franchising perspective, you guys are really blowing it out of the water. As I said before, you have the highest fund score among all brands in the food industry. And if we just look at the averages among different sectors in franchising, QSR industry has an average fund score of 593 with a median score of 610. So you guys are well above the average from other brands. Now that's really great from a franchisor standpoint, and it speaks to the success of the team as well as you guys as franchisees. But how does this information impact the conversations that you're going to have with lenders and being able to kind of move those conversations forward? The fund score of Tropical Smoothie tells a story of success both within the brand and in benchmarking against other concepts. So I want to talk to you and think about, what are some of the objections that we might be hearing as franchisees and borrowers from lenders when we're going in saying, hey, we'd like to open another unit of Tropical Smoothie, or maybe it's our first unit of the brand. And what are some of the blanket objections that I know I've heard just in talking to lenders, but I'm sure some of the franchisees on this call have already started to hear it. Blanket statements like, hey, SBA is no longer lending to food. We're pulling back from restaurants. We're taking a pause. These are the types of kind of blanket objections you might hear sitting down across from a lender. But know that Tropical Smoothie has the information and the see-through into their financials to be able to distinguish your brand against this idea of we're pulling away from restaurants. You guys are all the same as franchise food. There are some very specific performance numbers. Darrell showed you some of those in terms of the growth of the system, but also your top line revenue growth, specific characteristics that are in your fund report and in other reports that really separate your brand from restaurants. And like I said before, what would be termed franchise food, that really can give lenders a lot of additional comfort with your concept and the plans that you have. So I know that Cheryl and Jennifer on the franchisor team can assist and help to tell that story to lenders. They've supported individuals that have had specific information requests from lenders. So we're going to talk about some of the questions that lenders are asking and what to be prepared for. But in addition to the fund report, Tropical Smoothie also maintains a bank credit report on our franchise registry site, which is an in-depth analysis of your performance, which provides even more see-through to lenders. And these are some of the tools that really the top tier franchises out there that we evaluate are continuing to make available to lenders on a year-over-year basis. So they are, from a franchisor perspective and the leadership of your team at Tropical Smoothie, continually making those investments, not just in the brand, but in some of the tools to evaluate their credit and make sure there's enough see-through out there in the lending community so that when you do go have these conversations with lenders, you're getting a positive response. So I wanted to mention that here, that the team is available to provide more information when needed and is there to support you in your conversations with lenders. Next slide. So talked about the brand, where we are. I want to have some conversations with lenders about financing today, but I want everyone on the call to be prepared and start to think about what are some of the questions that lenders are going to be asking. What should I be ready for? What types of information should I start to collect, or at least to know my numbers to be able to have these conversations with lenders? The first question, as you guys are probably gonna know or anticipate, is that the first questions are going to be around COVID-19, specifically how it impacted you as a franchisee. We've heard a lot about banks talking about this as a local story, as much as it is a regional and a national brand story, in terms of think about how your local response was different. How did your region or locality affect you? Were there lots of closings up front? Were they a little bit later to the party in terms of closing business? The biggest thing with this conversation is to be transparent. The one thing I've gotten from lenders that in some ways surprised me was that lenders know that everyone was impacted to some degree in this. One of the earlier slides that we saw about different offerings in the food space and franchising, we saw pizza and QSR had recovered, but there are lots of other spaces that are still down year over year from last year. Lenders know that lots of folks have been affected. What they have communicated to us and other franchisors is that they're going to lend a lot more weight to how you handled the crisis and the course that you've charted forward in terms of a plan to be able to say, this is a good credit risk. We're willing to talk and lend to this franchisee, even though they may have had some issues with COVID. So understand to just be as transparent as possible. And as Darrell said, from the performance that we've seen in Tropical Smoothie, you folks as franchisees are likely to be in a much better position than most of the other universe of franchisees that are out there. So one of the questions that we've asked the franchisors that lenders have kind of keyed on are, what are the capital expenditures and operational changes that you made in response to the virus? So those are going to be anything from the way you are operating your business to some of the changes that were led by Tropical Smoothie Corporate to anything as simple as, signage, coverings, shields that might have gone up, anything and everything. So lenders really want to get into those specifics, even though you might think, well, that's really not a performance or kind of a P&L type of a question. It goes to your operational capacity and the way that you've responded to COVID. So really important. And again, performance numbers 2019 versus 2020 is something that lenders have keyed on. Next slide. More broadly, changes to the business model, and this is something that Darrell mentioned, and I know there were specific positive changes that were made by Tropical Smoothie on the corporate level that have affected franchisees. So again, one of the big things that the lenders are asking about, did you add or renew a focus on takeout and delivery? Really great story to tell there from a Tropical Smoothie perspective. You guys rolled out curbside pickup. You guys launched a branded delivery model in June of last year. So there's been a focus already from your brand on developing these types of lines of business and developing the takeout and delivery models. Lenders might ask specifically what portion of sales are coming from takeout and delivery versus in-store, as well as how third-party delivery applications are affecting the bottom line. And this is, again, where it's important to tell that story about branded delivery. This is a major issue around third-party delivery, the costs and the fees and things like that. It's a major issue that's facing the franchise space in the next 12 to 18 months. Tropical Smoothie is already out in front of this with the branded delivery and other approach that they have taken to this. So again, that's a really great story to tell when you're talking to a lender, and something that will be emphasized when Cheryl and the rest of the team may assist you with conversations with lenders. And I just wanted to, again, reiterate the point. Lenders are going to be requesting information. Your franchisor team in the past has provided direct reports to lenders to help these underwriting questions. And really what we're talking about is to give a comfort level around a deal. And we need to kind of get over that hump with lenders to understand that this isn't just franchise food. This is a top-tier franchise brand. There are distinguishing points in their performance that sets them apart from other concepts. And really, to help them do that, you guys really have great support from the franchise team, as well as my team on Franchise Registry through Cheryl and your team at Tropical Smoothie. So you guys have tons of resources out there. And there really is a lot to be excited about in the current lending environment. And that is going to be my next slide. It's just really piggybacking on a lot of what Darrell had kind of set up in the beginning. There is a gigantic opportunity out there right now for the single unit, the 1 to 2 unit operators out there on this call to connect with SBA and conventional lenders out there to grow into the more mature multi-unit operators. One of the things that's unique about this crisis is that lenders are still looking to deploy capital. The most recent crisis that we had in 2008 was a lending and financial crisis. This was not a lending and financial crisis like 2008. This is more of a socioeconomic crisis that was brought on by external factors in the virus. So the state of the lending environment, the state of capital access and availability is not what it was in the last recession. So that is a good thing. Lenders, like we said, are looking to identify those brands and franchisees that performed and weathered the storm, and they want to grow with them for the next 3 to 5 years. So this is not just a motive that Tropical Smoothie has from the top down. Lenders are actively out there right now trying to say, hey, we need to get with the brands and the franchisees who are going to take us through growth for the next 3 to 5 years. We know we've taken a hit. Lenders out there have looked at their portfolios. They're seeing the underperforming brands, and they're looking to grow with stronger concepts and multi-unit owners like the folks that are on this call right now. So you guys are in a very attractive position. You guys as franchisees are very attractive to lenders, and that's one of the things that I really wanted to hammer home for you guys to go out there and have those calls. I think we have a next slide to talk about next steps. We'll just go ahead and move that. Yes, so in terms of resources, this is exciting you. Think, wow, okay, there's opportunity. I want to get out there. I've got ideas. How do we do that? To talk about lending partners and to build support for your growth plans, contact Cheryl or Jennifer on the development team to get the list of preferred lenders, and they're going to help you start the conversation. They've had conversations with both third-party and first-party lenders, so there are resources there available for you. Please reach out to them to be able to get plugged into that pipeline. If you guys do have existing relationships with lenders, franchisor team can also support, again, like we've been talking about throughout these slides, on educating them on the brand and the current state of Tropical Smoothie. That includes the fund score, the bank credit report, any other custom requests for information. Even if you do have an existing relationship, there may be internal factors that you're not aware of that this crisis has impacted a specific bank. That bank that you're working with may have had a huge exposure in the hotel space and a giant hotel portfolio. As a result, they're pulling back from lending. It has nothing to do with the success of your brand or their appetite for food. There may be external factors there. So again, even if you do have existing relationships, remember that those resources are there from the franchisor level. And again, as I said before, my team at FRANdata is available. We'll work to support and assist you through Cheryl.